A lot of information that's come out today is affecting the real estate market, including GDP and home buyer demand. We're going to go over that next. Yes, and in our red file, we're going to have a couple of pretty funny articles that are out there. One here in the state of California, where everything's funny, and the nightmare continues to be in Sacramento. All next on Real Estate Daily. Welcome, everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage market. Now, if you're out there and you're saying to yourself, I think the government is going to do the best for me, don't even think about that. It's probably one of the worst statements I've heard. I've heard several people out there that's mentioned it. If you're in the state of California or you're in the United States, I haven't seen anything that the government has done for me that's made it better living for me, better life for me, better anything for me. Of course, I'm not Nancy Pelosi, and I'm not the one that has insider trading, and I just made $500,000 on a long trade. What a joke. She still has all that power, and all she's using it for is to inside trade. That's not, that's just my opinion. IPO, my opinion, I'll just say it that much. I just think that's pretty funny that she just made another cool $500,000 on a video. All right, let's jump right into it, guys. This is from CNBC. Let's get right down to it. Homebuyer demand pushes mortgage applications higher, even as interest rates inch up again. The anticipation of buying a home. I've said it many, many times. And I tell people all the time, 90% believe me, 10% say go pound sand. But the separation of the middle class is going to be based mostly on whether you own a home or not. If you want to be a renter all your life, you will sacrifice and die on that cross for rents. And that's all you are. You are absolutely, reliant on somebody else who's going to raise your rent, who is here for a money-making activity. And then when 30, 40 years go by, what do you have to show for it? Yes, you got it. Return checks you can burn and keep that fire going. Or you can make a plan and go get a house. Or if you have a house right now, stay in there. You're enjoying a steady monthly payment, hopefully with a amortized loan, steady monthly payment at a low interest rate, and you're happy. As inflation goes up, your household inflation doesn't have the same effect as other rental household inflations go up. All right. Do me a favor, guys, before we jump into this Orange County Register article, hit that like button. We really appreciate it. I want to get this channel up. I'm giving you the best 5 to 10 minutes in real estate on a daily basis, and I'm showing you what's happening, even as us real estate agents, again, are being sued. It says Realtor Association deluges a copycat commission lawsuits. Well, in Missouri, it started where the National Association of Realtors that didn't really show up mentally, they showed up physically, as well as you got a Gary Keller, who blew it and got evicted right out of Keller Williams, at least the CEO stage. Well, they fought, saying that real estate agents like us go out to a listing appointment and we force the seller to give the buyer commission. Well, we suggested, and in fact, I've been to many times where they've told me, no, I don't want to give that out. I don't want to do that, and I go, do what you want to do. Most of those people become either they give out a lot less commission and go with another agent, or what they do is they are their own sellers and they deal with it themselves. So with that being said, these are all these lawsuits. They're called copycat lawsuits. We're going to end up at the Supreme Court or some higher court that's going to make a decision on whether we're forcing it. Now, initially this was because we were forcing 6% on every one of the sellers. I don't know who charges 6%. I've probably done it less than 1% of my time in my life, but everything else has been in the 4s, it's not the 3s. And what it does is it pays for quite a lot of different things that we do as agents, because I'll tell you right now, there's a lot of buyers out there that you'll show homes to that will never buy a home, but you never get compensated for it. So because of that, I feel that, for most of us, I don't want to charge a buyer to show homes. Is that the alternative? Think about it. I do it. I do it because there is something down the road that I'm going to get paid on. I make a living on it. But regardless of how much, whatever that amount I get paid, I'm going to give the Class A representation to my buyer, whether it be $500 or be $5,000. It doesn't matter. You want to give it to, because I want them to recommend me next time their friends are looking for homes or they're going to sell their home. All right, we're going to go to the great state of California, and we're going to go over a couple of articles that you gotta laugh, man. And we all wonder why that Gavin Newsom's where he's at, and the people who run this state has been a complete joke, a nightmare. And we saw that, Silicon Valley Bank, which was run right into the ground, which was bailed out by the government because it was run so poorly on their decisions that they made and who they put in power. To think that the CEO, the head of the bank, turned around and kept paying himself all the way up to the point where where his stock went down 95%. He kept paying himself. He kept putting in, spiffs or money. He kept paying himself commissions for doing a good job. What a joke! What a complete joke! And CalSTRS how could it be run any different than Silicon Valley Bank? It's a bunch of bozos. Let's go over it. So at this point, CalSTRS is running about $700 billion of mostly California retired Californians or retirement funds for Californians. And then when you start looking at it, what's happening with this portfolio? We just heard a couple things come out saying that if they don't come up with $30 billion, then they're going to either have to borrow it, which you're paying interest on, or they're going to have to sell off at a loss. And that hurts all CalSTRS. So I said, you know what? I'm going to go look into some of the holdings of CalSTRS. Or they got NVIDIA. You got to think they have NVIDIA or Google or Microsoft, the top 7. You got to think that those returns are 20, 25, 30%. Some of them are 50% returns. They are helping out their fellow Californians. Well, guys, think twice. This is literally, when I went through this, CalSTRS, it wants to make you vomit. It really looks like they're in bed with certain companies, and those companies, that's it. And when I saw their portfolio holdings for real estate, and they only went through Bank of America, that's it. The bank, most of you, when you go out and go get a home loan, do you go through Wells or Bank of America or Chase? Most of you will go to Rocket Mortgage. They're much more competitive, much more faster, and that is their core business. Their core business at Bank of America is not to get loans, okay? Their core business is to take your money, put it in the bank, then turn around with your money and then reinvest it into bonds where they're making the difference. Yeah, some of their offshoot businesses is loans. Very little now. I would say over the years, how many of my clients actually had Bank of America loans out of 800 to 1,000 clients I've had? 1%, maybe 1%. Virtually nobody uses Bank of America. So let's go look at it. 1-800-FLOWERS. So we're looking at the portfolio holdings here. CalSTRS, 1-800-FLOWERS is one of their top security holdings. Let's go look at, yes, 1-800-FLOWERS. Here we go, guys. This is the state of California, and this is a 5-year chart of 1-800-FLOWERS.com Inc. Look at this. If this doesn't tell you that somebody in CalSTRS is not doing their job or might be paid off, whatever it is, you can't tell me the 5-year chart on 1-800-FLOWERS, which they're holding hundreds and hundreds of thousands of dollars for your retirement fund, in the past 5 years has gone down 34%. So you're telling me that CalSTRS, that is I think the third largest retirement fund in the United States, their first holding has gone down 35%. So you guys out there are banking on them to make good decisions. You could have made that bad decision yourself. Or you could have put it into a house And in the last 5 years, it would have went up what? I think it's 56, 50, 60%. It went up 50 to 60% in value. Some places, some areas doubled here in California. Yet you're putting your money into CalSTRS, which is losing money on their own. This is ridiculous. I mean, do we want to keep going down? Look at all this. Guys, someone jump into this and take a look at it. You need a, I mean, this is like, you know, Arcadia Pharmaceutical, Arcadia Realty, you know, Acacia, excuse me. I mean, look at this. These are all holdings. Okay, let's go see NVIDIA. Let's go see Microsoft. Come on, people. This is not a good thing. It's not a good thing whatsoever. All right, and the last one here I want to go over in the state of California in the red file. Thank you, Governor Gavin Newsom, for your thoughtful insight on how people should make cars and what they should do. California, this is Cabesi Letter. This is on X. Guys, give them a follow. They are fantastic. Let me pull this down a little bit. California may become the first state to require new vehicles to be equipped with speed governors. So they want to regulate your speed because they don't trust you. This is a form of control. If you actually look at all the bills that are passing, it's all about controlling. That's why you're seeing a hemorrhaging of 250,000 people every single year out of the state, you know, just leaving. Nobody wants to live in a state that is broke. Thank you, Gavin Newsom, for that. That is, homeless has gone skyrocketed. It's the #1 impoverished state. Okay, its crime rate has gone up 13%. It's a complete nightmare. And then they have nothing better to do because, you know, crime is an issue that's on the top 3, or homelessness, whatever. None of those are issues out there. In a bill introduced this week, vehicles built or sold in California starting in 2027 would limit drivers from going more than 10 miles an hour over the speed limit. Under the speed governor requirement, cars wouldn't be able to drive faster than 80 miles an hour on state highways and 70 miles an hour speed limit. The bill will also apply to city driving, limiting speeds of 35 miles an hour in residential streets and 25. So imagine if you were in a bad situation, you know, cars are on both sides of you. The car in front of you slams on their brakes. You have to go divert, slide off to the side, or you have to speed up over here. Sorry, my car doesn't do it because my governor says that he doesn't trust me to actually drive properly. So instead, he wants to drive all the car manufacturers, auto manufacturers outside of the U.S., outside of California, and he really wants you to buy your car in Arizona and then drive it in here, because that's what he's trying to say to you. So he wants to hurt the sales of cars in the state of California. Guys, how is this guy a governor? I don't get it. Hey, if you have a different opinion, please leave it below. I don't see any way. He just raised the state tax, the state income tax. He raised the state gas tax, 3 years ago. If he's trying to raise property taxes, but he keeps running into it, and he's going to probably put in a proposition coming up this year, and the proposition is going to be, meaning he's going to say one thing and then spend, 10, 20, 30, $100 million on ad campaigns, and it's really going to mean something else when it's written, because no one's going to read it, but you're going to see the advertisement. That's exactly what they're doing. They did last time, and they'll do it again. But this time it'll be property taxes, or it'll be a green bill initiative, meaning every Californian has to have their house outfitted a certain way, so it would be a green house. And that would cost you tens of thousands of dollars out of pocket. It could be due by a certain time, or it also, we're hearing, it could be if you sell your house, then you have to outfit it with $50,000 to $100,000 worth of green technology, right? Because they don't want your house they want your house in a green situation, even though the majority of wind, or what, all the smog and all the garbage and pollution are coming from China and Asia that makes its way across the Pacific Ocean. Don't worry about that. We don't care about them, because I know they don't care about ESG. All right, get off my high horse. Let's jump right into it, guys. Here is interest rates. went up about 3 basis points for conventional. But look at FHA, man. It's down to 6.5, you know, and then the conforming went under 6. I told you it should be in the low 5s. Why would you do a 15-year here when at less than a point you can go 30-year? The difference is you're paying it off. You're paying more principal than interest. So here are the numbers. I'm kind of happy. They're just kind of hanging there. They're not doing anything. The Fed meeting is next week. We're going to find out what's happening on that front as well. So, well, thank you very much, guys, for joining me today. I really appreciate it. If you have any comments, please leave them below. Otherwise, I will see you on Monday.